Hello again, traders, and welcome back to the Hot Stocks Outlook for November 22nd, 2024. I hope y'all have had a nice week out there in the financial markets. And as always, we're going to take a look at the most recent VantagePoint A.I predictive forecast. So if you haven't already, make sure you go ahead and click on that link down in the description below and get signed up for a live demonstration so that you can learn all the specifics about how these predictive technologies are helping traders make much better trading decisions out there in the marketplace. So as we typically start out, we look at the SPY ETF just to get a sense of the broader market price action over these given spans of time. And so not much has changed, right? We're still up over 30% over the past 12 months. Year to date, just peaking over 25%. And we've really recovered just last week when we saw that dump on Friday as far as prices going lower. We've recovered a bit, and we want to keep walking this forward and assessing, all right, what's going on out there in the markets? Where should traders focus their attention? And so we have a lot of good examples of how all of this works for VantagePoint traders, really regardless of which markets that you're trading. So we can start out here in this example of Gamestop. And the first thing that we're looking at here is daily price action, right? So everything in VantagePoint works off of end of day data. So each one of those candles that you see, well, that's going to be a full and complete trading day start to finish. And it's right up against all that price data that the first thing we really want to understand is this black line and blue line value right up against those daily price candles. And so the black line value, well, that is what we refer to as the actual or lagging simple moving average, because all this is a 10-period simple moving average. For VantagePoint traders, we really use it as more of a baseline because what it does is it just looks at the previous 10 close prices, adds them all together, and then divides by 10. And really the main weakness with traditional technical analysis like this is that, for one, all that market is lagging. It's already occurred. The market's already digested that information. And two, it looks at the market in isolation. So it's only looking at GameStop as if GameStop trades in a vacuum. And so what VantagePoint traders are able to utilize and understand is that dozens of markets are known to drive and influence the future price of GameStop. And those can be things like the broader indices, like the SPY that we looked at. They can be broad ETF groups that wrap up a huge grouping of shares in the marketplace. But it can also be things like the value of the dollar index or global interest rates, all the way down to things like global commodities, as well as individual stocks that share important market relationships. And so what these neural networks are able to do is look at those competing market relationships, summarize that into a highly accurate forecast that traders can use to execute their trading strategies. And so whenever we see this blue line cross above the black line, well, what's happening is there's this skewing event where what's happening is those intermarket relationships, whether bullish or bearish, are going to have an effect on these indicators and potentially skew them more bullish or skew them more bearish. And so whenever we see that blue line cross above the black line, which suggesting, look, average prices are expected to start going higher. And as long as that blue line remains above the black line, you'd expect the overall trend to resume higher. So you see here about a 26% rally in just 19 trading days in shares of GameStop. But more importantly, we can take a close look at these other indicators. If you look at the bottom of the chart, this is our VantagePoint Neural Index, and it's solving a different problem for traders. So maybe you're a swing or trend trader and you want to lean on those predicted moving averages, but sometimes you need to make trade adjustments or do some short-term decision making. And so what the Neural Index does is over the next 48 hours, it's predicting short-term strength or weakness in the market. It's utilizing those intermarket relationships, looking at those competing, relationships, whether they're having bullish or bearish or leading or lagging effects on the market in question. But it has an extremely high level of accuracy, upwards of 80+%, on really all different markets, through earnings, through Fed announcements, through election cycles even. And so that helps traders really understand the short term and potentially manage trading opportunities. And you'll notice here that when that neural index goes bearish within the uptrend, well, we get a couple of days of subsequent price weakness. Even after this green candle here, where you got a pretty solid close up towards 27, you see that the neural index actually gets bearish here, and you see that the market runs sideways for really the whole week there. But the overall trend still bullish, and the trend moves higher. And so lastly, we can take a look at our predicted high and predicted low range. And so we can really pair all of this together, and also remember that all of this is driven by this technology: the predicted moving average, identifying the trend, our neural index at the bottom of the chart with 48-hour forecast. And we're also provided this predicted high and low range before each and every trading day occurs. And so we have this habit of each week going back and looking and saying, okay, well, how accurate are all of these predictions before the trading day actually occurred? And so when you recognize that uptrend, and you can start utilizing this information to stay patient and say, okay, well, where should we look for better price levels to get involved in the market? And we see here so far, what is that, about 8 entries on the bullish side, where almost immediately that uptrend is resuming and shares going higher. So really nice move here in shares of GameStop. But interesting, again, this is being a meme stock, right? It can get very aggressively bid up very quickly. There gets a lot of excitement around the stock. But regardless of if it's going up, going down, short-term, long-term, we have the information to make some better trading decisions. Now here's, I want to focus on Helen of Troy and actually Cameco here. These were great opportunities in August and September. We had a lot of bullishness from our predicted moving averages in the forecast. Well, we're starting to see some of that turn higher again. So here's Helen of Troy. Here you see again, just the past couple of weeks of daily candles. And we get that blue line crossing above the black line with this really strong close. And you'll see here how the VantagePoint predictive indicators work together. The neural index goes bearish. We run into a consolidation phase, but notice that that predicted moving average is still solidly above the actual moving average. And when we get everything in alignment, well, that's where momentum really kicks up into the market and towards the bullish direction here. So far, a really nice move, from these predicted lows. You're up about 6, almost 7%. In just the past 7 trading days. So interesting start to a move there in Helen of Troy. Here's Cameco. So very similarly, really nice rallies during the summer months, but we'd cooled off a little bit. Now we're starting to see this blue line cross above the black line. Again, that neural index warning of subsequent price weakness over the next trading day. But this is a bullish market and you'd want to be long, take profits on those long positions. And again, we see a really nice move here. Out of an area that's getting a lot of attention, this being nuclear uranium mining, about a 15% rally, again, in just the past 7 trading days. Now, what's important about recognizing these trend shifts early is sometimes they persist for a long period of time. And so here's shares of TOST. You see this going all the way back to October, that blue line crossing above the black line. And similarly to these other examples, you want to get that, establish that position early. And when you have a tool like VantagePoint that's warning you of when the trend starts, when to expect some sideways or a subsequent price weakness over the short term, well, then traders can go in and manage the opportunity effectively. And so you see we got this big uplift from earnings, but there's about a month of trading going into earnings where traders want to be aware of, okay, well, down towards these predicted lows, we can establish a position. We can potentially take some profit up near these predicted highs, and that may actually give you the cushion to deal with the volatility around earnings. And you see you get a nice uplift going in and then a huge move after. And so even after all that volatility around the earnings, you still see that these indicators adjust. So every single day they look at the target market, they look at those intermarket relationships, and then they forecast out all of these predictive indicators, giving you a new updated forecast to make your trading decisions. So again, really nice move here in TOST. And we may see markets actually do well from here. So once we get through some of that volatility and weakness we saw towards the end of last week, well, every single day we're actually running in scans to look for where are the new opportunities coming in, how bullish or bearish are things broadly across the marketplace. Here you see about a 47% rally in 28 trading days. These markets back in the summer months had moved about that much, about 40-50% rallies before cooling off for a few weeks here. Let's move over to energy. And so this has been an interesting place. We've actually seen a lot of the natural gas stocks sort of perk up. This here in LNG shares, you see again, you get this blue line crossing above the black line, but I wanted to highlight how all this works together because we have a start of a trend, we have the neural index getting bearish, going right into earnings, and then that catalyst right at that earnings report. And so this is again, why this is so important is recognizing, look, in the short term, yes, the market's going to drift down lower into earnings, but the overall trend is actually bullish here. And then you see, even after you get through that earnings report and we're trading day to day, you've got these updated forecasts that say, okay, well, look down towards these predicted lows if you want to get involved in participating in this market, but a lot of strength and momentum here from the neural index on those rallies. So really nice opportunity here in shares of LNG. And again, an area that's, hasn't got a lot of attention over the past several months, but starting to see things perk up a little bit. 21% move in just the past 20 trading days. And lastly, I'll just end on a lot of these food stocks. I just don't want them on the radar, right? So here's Kraft Heinz. We've seen like Coca-Cola. A lot of these markets do very, very poorly. But here we see that blue line crossing below the black line. Again, you'll get these periods where within the downtrend, you're going to get that retracement and move higher, but then a resumption of the prevailing trend there. And so as we look more closely at these predicted high and low levels, we can see very clearly all you'd want to do here is short, take profits on shorts, maybe trade some options, but completely get out of the way, not only in Kraft Heinz, but many of these other food, grocery store stocks look to be under some pressure here. So again, VantagePoint doing a great job with these forecasts, really identifying some of the strongest trading opportunities in the marketplace. So we'll go ahead and leave it there for today. Once again, this has been the Hot Stocks Outlook for November 22nd, 2024. Thank you all for watching. Best of luck and bye for now.